Hello everyone and welcome back to this informative session where we will delve into the world of analytics that our Python build offer. In the previous video, we witnessed how to craft and execute a trading strategy using Alpaca. Today, let's explore the extensive analytics data generated from a backtested strategy over 2 years.
To begin, let's uncover the range of performance metrics that give us a deep understanding on how our strategy is performing. So here we start. Total returns. These are the total summation of all the return of our strategy executed from start to end. The next is Sharpe ratio. The Sharpe ratio is a crucial gauge that measures how well our algo strategy is performing against the risk it takes. It quantifies the excess return our strategy generates per unit of risk endured. A higher Sharpe ratio points towards a superior risk adjusted performance. Next is Sortino ratio. The Sortino ratio is another essential metric that emphasizes downside risk. It evaluates how our strategy's return stack up in relation to its downside volatility. Only considering negative price movement, a higher Sortino ratio implies better risk adjusted return by minimizing the impact of downside risk. Next is volatility. Now, volatility highlights how much a strategy's return fluctuate trade by trade. High volatility indicates larger fluctuation, signifying both high potential return and losses. In contrast, low volatility suggests steadier return. This metric provides valuable insight. Traders often use the Sharpe ratio for low volatility strategies and Sortino ratio for high volatility strategies. Next is maximum drawdown. The maximum drawdown refers to the drop in our strategy's return value from its peak to its lowest point. It measures the loss experienced during a specific period. A larger maximum drawdown signals higher potential risk and volatility. Next is the hit ratio. The hit ratio, often dubbed the winning ratio, assesses the proportion of successful trade among the total number of trade. A higher hit ratio indicates a greater percentage of profitable trade. It's important to note that a high hit ratio doesn't guarantee positive return on its own. With these performance metrics in mind, let's venture into the realm of visualization. Visualizing the data helps us grasp trend and pattern with clarity. First, we look into cumulative returns. The cumulative return charts illustrate how our strategy returns value has evolved over time. Positive values indicate gains while negative reflect losses. Bigger positive returns are more favorable. Keep in mind, this chart focuses on gain and losses excluding risk and time consideration. Next is PLL return. This chart shows the profit or loss per trade mapped on the timeline on x-axis. We can toggle the chart to change the value in y-axis to percentage or dollar, depending on your preferred choice. On the next section, it is end of year return. The end of year return chart showcases our strategy's annual performance as a percentage. It quantifies its overall performance considering gains or losses throughout each year. Next, we move on to monthly return distribution histogram. In the monthly return distribution histogram, we see the frequency distribution of different level of return over consecutive months. This histogram helps us understand the range and pattern in the monthly return, shedding light on our strategies, volatility, and performance traits. Next is monthly return heat map. The monthly return heat map offers a color-coded view of our strategy's performance across months. Shades of green indicate positive returns, while shades of red signify losses. This visual tool helps spot trends and patterns, aiding in identifying strong and weak performance periods. Next is daily return. The daily return chart portrays the percentage charge in our strategy's return between trading days. It provides insight into short-term volatility, trend analysis, and risk assessment. Next, we move on into is underwater plot. The underwater plot visually narrates our strategy's performance concerning its past peaks. It showcases how much our return value has dropped from its highest point over time. This aids in visualizing periods of drawdown and recovery, offering insight into historical risk and resilience. Next, we move on to heat maps. We also present 3 calendar heat maps for gross ROI, trading volume, and total number of trades. These heat maps depict daily aggregated values using color code. For the gross ROI chart, darker shade of green indicate higher positive values while darker red indicate more negative. For the other two heat maps, the values are represented in blue with deeper shade indicating higher values. Wrapping up, we provide a comprehensive trade by trade history in a user-friendly tabular format. This table offers entry and exit trade detail, prices, timestamps, transaction type, trade by trade profit and loss in percentage, or if you want, you can see it in dollars.
If you are excited about replicating these charts and metric in the Jupyter Notebook, great news, you absolutely can. We have developed a Python package named PLL Trading in GitHub to help you achieve the same. And for those wondering if you can analyze your own trading strategies on our website but executed outside AlgoBulls platform, stay tuned. We have an upcoming feature that allows you to generate this metric just by uploading a CSV file with the trade details. This concludes our detailed insight into the world of analytics AlgoBulls provide for every strategy. May this wealth of information empower your trading endeavor. Thank you for your time and remember, happy trading.